Welcome to Looking at the Markets with David Modell. I hope that all of you are enjoying your holiday. I'm still thinking about finance and ways to help you potentially make money even on a holiday. So I'm thinking about gold and silver, precious metals. I believe in owning the mining stocks. I think that's a great way to go, very convenient way to get exposure to the metals, as well as owning the bullion, the gold and silver bars, coins, and so on. So it's a big deal. Gold at around $1,800, a key level. It's been up to 2,000. Why can't it get there again? No guarantees, but I believe this is a great price. And then silver touching 20, actually going below $20. There it is, 1982 as I'm making this video, below $20. And some people are going to look at this chart and think, oh, it's getting nasty, getting ugly. I don't think that way. I believe in buying low and selling high. Okay. That doesn't mean you can't buy up here at 25, 26, 27, but what if you bought below 20 and then it goes back up to 25 or higher? Then you'll be sitting pretty, okay? Silver is good to buy at any of these levels really for the long term, but a lot of people talk about buy low, sell high, but how many people actually do it? All right, a lot of people panic sell when something goes down, even if they believe in it. So why is this happening? Well, this is from kitco.com. Gold and silver bulls squelched by firmer U.S. dollar. Now, the dollar has crumbled over the years and decades. Think about what you could have bought with a dollar 20 years ago, 50 years ago, and so on. And what can you buy with a dollar now? Not much, right? Think about how much anything has cost, really, whether it's a gallon of milk or a car or a house 20, 30, 40, 50 years ago compared to today. The dollar has been deteriorating decade after decade and will continue to do so, but along the way there will be little pops, little rallies. And so when you see a headline like this, you can say, oh, okay, this is a chance for me to buy some more gold and silver if I want to. Always make your own decisions, okay? Don't do something because somebody in a video said it, all right? You have to do your own research. But whenever the dollar has a little rally, that is just a sucker's rally, really, because the dollar, it's going to continue deteriorating over time, in my opinion, no guarantees, but it's been doing so in the long term for generation after generation. So why would the dollar suddenly stop deteriorating? Okay, but again, it's going to have these small little rallies along the way, which is going to put some temporary negative pressure on gold and silver prices because they're measured in dollars, at least in the United States. Okay. So here's another headline, if you're into headlines. The U.S. and Britain will ban imports of gold from Russia. What do you think this could do to the gold price? Think about it. Here's the announcement. Together, the G7 nations will announce they're going to ban the import of Russian gold. And so they're trying to punish Russia. But Russia is one of the world's biggest gold producers. There it is. And so look at what happened to oil and natural gas. Look at those prices, okay? When the supply is choked off from one of the biggest producers of a commodity, what does that do to prices? So think about what could happen to gold over time. It doesn't always happen immediately. Sometimes when the dollar has the rally, temporarily that could suppress the price for a little while, but not forever. I don't think so. Again, no guarantees any of this will work out, as I'm saying it will. But you can see the writing on the wall already if a major supplier is choking off that supply, or actually they're not choking off the supply so much as these nations are just not going to buy it from them. So here's a chart that I think people should look at more often. I've talked about it a number of times, the gold to silver ratio. And so there's nothing wrong with buying gold, of course, but silver could really be a great way to go. And so this is the gold to silver ratio from goldsilver.com. I want to give them credit. And look how high it is. It's above 90, 91 or so. And so what does that mean? The gold to silver ratio, it's the price of an ounce of gold divided by the price of an ounce of silver. In other words, how many 1 ounce bars of silver would it take to make up the cost of a 1 ounce bar of gold. All right, so it would take 90 of them right now. Imagine a pile of 90 1-ounce bars of silver equals just one 1-ounce bar of gold in terms of price in US dollars. So why is this useful? Well, according to goldsilver.com, whenever this ratio has topped 80, which it has, okay, it was 91 or so, definitely went above 80, it has signaled a time when silver was relatively inexpensive compared to gold. And the last 3 times the gold to silver ratio went above 80, what happened? Well, silver went up 40% one time, 300% another time, and then 400% another time. The last 3 times this happened, according to goldsilver.com. So, yeah, that's telling you something. You don't know, and I don't know what's going to happen to silver next, but it's looking pretty cheap, at least relative to gold. And you know, as soon as this dollar rally ends, and all rallies do end at some point or another in the dollar, what could that do to gold and silver prices? And again, you have this dynamic between the G7 nations and a major supplier of gold, Russia, and the gold to silver ratio, all adding up to one thing or two, which is buy silver and buy gold, and maybe buy more silver than gold if you want to. All right, so this is not a sponsored or promotional video. This is just me speaking from the heart and using some research on this holiday weekend. So I hope you can use it and benefit from it. So I want to thank you for watching and listening. More videos are coming soon.